First, we start off with what looks like mission impossible for the market. The S&P 500 testing 2,800, clinging to what has been a key level for the index since the market highs back in September. It failed at 2,800 back in October, again in November, then for a third time at the beginning of December. And today we broke through it, but closed just below. So here we are again, same market, not too much has changed. So can the S&P 500 break through 2,800? Are we heading higher from here, Guy?
Look, Tom Cruise is
good tunes,
right? I mean,
bad time.
Yeah,
bad time.
Bad time of what?
We had good tunes.
No, a fair point by Tim Seymour. I appreciate it. Listen, I think we're going to roll over. I've thought that for a while now. I said last week that I thought the market was rolling over. Maybe it's just making a top. But I'll say this. I think if you had asked me yesterday after President Trump tweeted about his great relationship with President Xi and there's a deal to be done if the S&P would close up 3 handles today, I would have said probably not given the environment we find ourselves in. That's exactly what happened. So maybe we've reached a point of diminishing marginal returns in terms of what the president can tweet about, and maybe we are overextended. Tim will talk about the market being overbought on all types of metrics, and I think this is as good a level as any to call a top.
Are you going to say RSI and all these?
Well, Guy has teed me up, so I have to do something now. I will say, do you feel comfortable owning the Dow or the S&P at a 76 9-day RSI, which is a measure of how overbought or oversold we are? It doesn't mean that that overbought condition can't dissipate relatively quickly. But look at the semiconductors, for example, as we've also monitored their recovery from really falling apart in June and leading much of the market move. Do you want to own the SMH somewhere north of 192, which is a level it's been running up into 5 times? And so the catalyst for the next move higher in the market, I would argue, is challenging, except for the fact that the Fed, every time we turn, gives us a new reason to try to define inflation and understand what dovishness could actually look like. Humphrey Hawkins tomorrow, something to watch. I actually think the Fed could disturb the markets a little bit.
Yeah, I'm with you on that. I mean, listen, I've thought that this market has run a little too far, too fast. While I've been bullish, I think there's time for a pause that refreshes. The risks in the very short term. Federal Reserve Chair Powell talking tomorrow. We know in the past that sometimes he has said things that have upset the market. Whether it's on purpose or not, we don't know. But we've got a 2-day talk on the economy, which could upset the market. Not only that, now you have potentially the sell the news event, right? We've priced in a lot of this deal. We've priced in a lot of the Fed cutting rates or stopping the balance sheet reduction. So everything to me seems to be priced into the market. I'd much rather be a buyer when it falls apart again, when Powell says we're going to raise rates, when the deal in China falls apart, because in my view, those things will be remedied.
Take a breath, bro. Well, here's the deal. So this is all pretty symmetrical if you think about it. What happened on December 3rd, 4th, right after the G20, the president announced some sort of deal with China in a tweet without any substance. And where were we at that point? We were at 2,800. Where did we pause right now? On a tweet last night that we really didn't get going on, 2,800. So here we have obviously some technical resistance. I'll just talk about, you just mentioned a cyclical sector like the SMH, the semiconductors, and you'd like to see the sort of rebound that they've had and the broadening out of that sector. But, David Rosenberg of Gluskin Sheff tweeted this a couple hours ago. He said, what kind of bull market do we have where we have utilities that are about to break out to a new all-time high, and we have transports, very cyclical, we'd like to see them lead, are still 9% off of their all-time high. So there seems to be a lot of cross currents here, and I'm not so certain that just because we got back to a level where we were in early December, where people were very uncertain about what a trade deal looked like or the next round of tariffs, that is a place where it's all clear to go in and buy.
We saw a failed rally in financials today. I mean, we had financials up by more than 1% at one point in the day, and they finished higher by 0.4%. So they seem to not have the power to keep going.
Throw the Russell on top of that, which I think closed either side of unchanged. And, last night before those Academy Awards, which I had watched on and off.
For the fashion, though, right?
No doubt about it. And for Brad Cooper, who, as I mentioned on Friday, watches the show religiously.
I'm sure.
But prior to that, I was watching the World Series of Poker. It's like, Guy, why do you even mention that?
Yeah.
Because everybody has a tell. And the market has tells. So you got to be consistent. Guess what was higher all day in a market that at one point today was up 200 Dow points? The volatility index, folks, and that closed significantly higher, probably the biggest one-day move we've seen over the last 6 or 7 weeks. I've said before, up days when the VIX is higher, that might be pointing to something. Maybe we're starting to see a turn. To me, that was the most interesting thing that happened today.
Was that a tell for you?
I think, yeah, for the very short term, when you see something like that, we're bouncing up against resistance, that's got to make you concerned. And to Guy's point, why not buy some puts in this situation? If you don't want to sell your stocks, nothing wrong with making hay when the sun shines. Protect that portfolio and wait for that downdraft. Now, in the long run, the things we have going for us, we have a president who wants to get reelected, whose his report card is the stock market. We got a Federal Reserve that's talking about changing the way they look at the world, perhaps changing the way they look at monetary policy. That, in my view, would be very positive for stocks. So between those two things, in the long run, you should be okay. But in the very short term, since this is a trading show, I'd be very, very cautious.
Well, you guys know what I hate. I hate the underperformance of AGA, which is the main part of MAGA. Well, no, Microsoft acts fine. It's the Apple, the Google, and the Amazon. They act horrible. They really do. They just cannot
really
get going. They have not broken out of their ranges. Amazon in particular, Google at one point was down in the day. So you take those three $800 billion market cap stocks, and I just don't believe that we are going to get back to the prior highs unless they get going, and they could lead to the downside too.
By the way, this is the same conversation we could have had for 100 points going back the last 500 points. So at every level, there's been a key level. It's been so obvious. It's been so easy to say. There's nothing left in the tank. And I think positioning continues to be to the upside. I think
you're
the
a reluctant bull.
Yes. I mean, I think the bottom line here is that if you think about where expectations have had to reassess very quickly, some of the things that let us down, and we were outperforming in the U.S. for a long time versus the rest of the world has a way to go. And I think that actually could be supportive. I don't think the S&P is going to get away from you in the upside, but the expectation that we're about to go into another vortex, I think, is what a lot of people think. And I don't see it happen.
I want to make one quick point. So we just said the last time the S&P was at 2,800 when we had a lot of uncertainty about trade. Well, think about where S&P earnings have actually come down. And this is to make your point. Expectations are far, far lower now than they were on December 3rd. And that's actually a bullish thing for a setup right now if you think that there's a bunch more clarity to happen on all these issues that you perceive as headwinds. So to me, that is a bullish thing because expectations were much higher. S&P earnings expectations for 2019 on December 3rd sat far higher than they did for growth.
But still, the underperformance of AGA, as you like to put it, outweighs all of that other stuff on the bullish side of the ledger.
Yeah, because look, we can pull up the NASDAQ chart. Here, look, 7,600. It's a huge level here. So we've had this amazing breadth of a lot of names that are not these mega cap names. Look at where that's stalling out, right back to those levels back in October. So we know that the mega cap tech, infrastructure, whatever you want to call it, has really underperformed the broad market. So if we don't have this group start to broaden out, the mega caps, you're not going to get to new highs.
But I could take at least two of the A's out of AGA and be left with maybe one stock I'd be worried about would be G. Apple, I can easily explain what's going on. We know what's going on with Apple. I don't think it's systemic of the overall tech sector. I think it's a company that's having trouble growing their top line after years of doing it. People are questioning iPhone shipments. People are questioning whether people are going to pay higher ASPs. I won't get into the Apple story yet because I bet we can get into that later. I will say that I think I'm not so worried that AGA or MAGA are not taking us higher because I think at this point the good news is that industrials have actually traded very well. Things that have been cheap that are more cyclical.
But Tim, we're talking about like those three names. We're talking about three $800 billion market cap stocks that have actually represented a good part of S&P earnings growth over the last few years, and they all have their own issues. We all know that Amazon has been missing on retail sales numbers, and their costs have been going up. That's been disappointing. That's why Amazon can't get going. Google, the same thing. Costs are higher. Apple has a China problem. So there's no crystal ball that says anytime soon with a trade deal that all that stuff gets fixed.